If you've ever brought the top or panic sold the bottom, this will fix it. Crypto follows structure, and once you understand it, the charts finally make sense. I'm Sunny, I'm a crypto swing trader. I combine liquidity sweeps with market structure. In this video, I'm going to break down exactly how market structure works so you can clearly identify when crypto is trending up, trending down, and when it's transitioning between the two. So you know when to buy and you know when to get out and protect yourself. Most traders never learn this properly, and that's exactly why they lose.
Let me keep this very simple. An uptrend is just higher highs and higher lows. A downtrend is lower highs and lower lows. What really matters is, where does the behavior change? That's where CHoCH and BOS come in. So imagine we're in a clean uptrend. Price is doing its job. Push up, higher high, pull back, higher low, push up again, new higher high. Now focus here. As long as the market protects this low, the uptrend structure is still intact. The first time price breaks below this key high low, that's your CHoCH. For me, as a crypto swing trader, the first CHoCH is a warning. The trend is potentially changing. I'm no longer treating this as a clean uptrend. This is where I'm looking to take profit on swing buys or exit long-term positions or exit long-term crypto positions. That was previously riding the uptrend. After the first shock, price often bounces, as we see here. This is the retracement. This is where most traders get trapped. They think, oh nice, it's going back up. The trend is fine. Let's buy the dip again. But here's what I'm watching. Price comes back up, but this time it fails to break the previous high, which is here. Price doesn't go above. So price comes back up, but this time it fails to break the previous high and forms a lower high, which is this. This is the new lower high. And then from that lower high, price rotates back down and breaks the low, breaking this low and making a new low. If price rotates back down and price breaks the low it made after the CHoCH, that's called a BOS, break of structure. So the sequence is uptrend, higher highs and higher lows. The first CHoCH. So the first CHoCH, a key higher low gets broken, which is your warning. Market forms a lower high. The second BOS, price breaks down again, which is making this new low. This confirms the trend from an uptrend to a downtrend. Once the second BOS prints, I'm no longer thinking uptrend with a deeper pullback. I'm now treating this as a new downtrend. So I'm expecting price to go lower. So if I do have long-term positions on crypto, I'm looking at exiting these and then waiting to see what price is doing, which the likelihood of it going down, it continuing down, is extremely high. Let me make this very practical and very clear. In an uptrend, I'm happy holding longs. I'm looking to buy pullbacks into higher lows. At the first CHoCH, I look to take profit or reduce size on existing longs. I treat this market as being in a transition phase, not a clean uptrend anymore. At the second BOS, that's where I accept, okay, this is no longer an uptrend. This is now a downtrend. I'm comfortable shorting or exiting long-term positions, and I will look for sell setups from the lower highs. If I only trade long, I'm patient and I'll wait for a new bullish structure to form later on down the line. So now let me show you some examples in the charts.
So I'm going to show you some examples. Here was a downtrend. It made lower low, lower high, lower low, and then price took that low again, made a new lower low, and then this was the previous lower high, and then look what happened. So price took the high, the previous lower high here, it took the previous lower high and it started making higher highs from that point onwards. So that was the trend change.
the trend changed from this point onwards from that shock. And then as you can see, price made higher highs from that point onwards. You know? Higher high. Higher high. It didn't take this low with a candle body close, so that doesn't count. It only breaks a low if it breaks with a candle body close only. And this was only a wick, and then it was a continuation. So I would have been looking for trades on both of these. I would be looking for trades. I would be looking for buyers here and here, because the trend is overly bullish. It's in an uptrend. But price made a CHoCH here and then failed to take this low here and then push back up. Price push back up. Made a high here. This is now the new low. And then look what happened. Then look what happened when it made that CHoCH. You see the trend started to change. Putting in a lower low. Another lower low. So from that CHoCH, it then made a BOS, and then that was the trend change from that CHoCH. So the moment it made that CHoCH, that was the signal that the trend was changing. And if you can master this, it will be extremely powerful as an investor, because no more would you be buying bottoms assuming it's going to go up. You can buy it now, buy with confidence if you can study this properly. So price was downtrending before. It broke the high. It broke the lower high and then started making high highs. It made a CHoCH here, but a CHoCH isn't guaranteed that the trend is going to reverse. It's just a warning sign. So I still would take buying opportunities here, expecting for a continuation of the uptrend. And then overall it started making high highs. It took out that low, messed around here for a little bit. But then overall it started continuing. So the best thing you can do is mark your market structure out for beginners, because it will make it extremely easy to see. So the moment you start seeing clear uptrends, you'd be taking buying opportunities here, buying opportunities here, because you know it's an uptrend. You know, there was another CHoCH there, but like I said, it's not guaranteed. It's just a warning sign. So you could be buying there, because that could just be tricking a fake out. And then continuation. Just keep marking up market structure. A high made. A high. High. That's the low. Didn't get taken. Could have taken a trade off of here because the price is still bullish. But then the market starts shifting slightly, so you could have taken a short position here, targeting these lows. But this is a bullish flag as well. But that's just like a bullish pattern. So I was saying to a couple of the people that I'm training at the moment that this was a bullish pattern when this was happening, a bullish flag. but it was downtrending. It did start to downtrend. And then the moment it took out that high again, and made a CHoCH, and then the BOS prices started going up, you know. So just pay attention to this, because this can be extremely powerful. You can avoid buying when the market is bearish and buy confidently when you see uptrends, and spot the transitions. Made a CHoCH here. So if any of you guys are struggling with this, just put it in the comments and I will assist with any questions that you have. And then look, BOS, and look, continuation, guys. Look at that. That didn't break that. Clear uptrend. So yeah, if you can master this is extremely powerful. Also guys, if you found this valuable, please drop me a like and a subscribe, and share this to anyone who you think needs to understand this.